Hello, good afternoon, and you're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Markets are not doing anything that great, but not a bad day coming in as well, right? Almost flattish to just a positive bias there.
Absolutely, very flat day of trade coming in for the benchmark indices. Actually, range-bound trade coming in for the benchmark indices. One thing that you can take note of is the fact that Nifty is now above the 19,400 mark. If you look at what broader markets are doing, they are actually outperforming the benchmark indices in today's trading session. For once again, actually, you have mid-cap index that is at today's highest point, 1% uptick coming from mid-cap index. Small-cap index also seeing good gains of about 0.8%. If you look at Nifty Bank moving in tandem with the benchmark indices, 0.2% of uptick coming in for the Nifty Bank, but advance decline ratio very much tilted in the favor of the advances as of now. If you see the advance decline ratio. Talking about the sectoral indices, then on the sectoral front is the Pharma and the IT index that are playing on the back foot. So you have the defensives that are under pressure, and joining the defensives right now is a PSU Bank index about flat with a negative bias is what PSU Bank index is trading, giving up all of its morning gains. Talking about the other sectoral indices that are at play today, so you have the metal index that is among the top sectoral gainer. You also have the media index that is among the top sectoral gainer, as well as FMCG and auto also are actually playing similar tune. So yes, you have the defensives that are a tad bit underperforming today, but it's the metal, media, FMCG that are ruling the charts, Vinny.
Absolutely, but let's get started with all those individual movers and stock movers and trade either on the back of news flows or on the back of technicals. And on the back of technicals, we have Kunal Bothra joining in with us, while from the research team, today we have Ankita as well as Vamakshi joining in with us. A very good afternoon to all three of you all. Good afternoon to you, Cheryl, as well. And let's get started with the first stock that is going to be in focus, that is GSPL. Now, this is on the back of a brokerage note that we have, and it's coming from Morgan Stanley, where they're maintaining an underweight rating on GSPL. They've given a target price. Now, they've cut the target price also to 265 rupees per share from previously 319 rupees per share. What they are saying is the muted and volatile volume growth is keeping them a bit underweight on the stock, and they believe that the holding company discount versus its listed subsidiary remains quite wide, so that gap over there is something they're watching out for. Also, in terms of GSPL's regulatory tariff hike for its transmission pipeline network, is pending with the regulator, and they expect a 12% and a 7% rise in EPS and NAV respectively for every 10% increase in the pipeline tariffs. So now if that tariff, whenever that consideration comes in, this is the impact that they're expecting. So let's keep an eye out on GSPL. As of now, Morgan Stanley is maintaining an underweight rating. Yes, the stock has recovered from the day's lowest point. As of now, trading with a slight bit of a gain of 0.2% in trade.
All right, moving on, let's talk about Paytm, and that particular counter is in focus in today's trading session. If you like Paytm, at one point in time, it was trading high by about 2.8% or so. Right now, also holding on to good gains, approximately 2%. Paytm in its annual report has said that they are investing in artificial intelligence. This is in order to build a general AI software stack. Paytm will be using the AI capabilities to enable small mobile credit. This is what founder and the CEO Vijay Shekhar Sharma had to say in the annual report. Also saying that the goal is to become a cash flow positive in the next few years. Positive commentary coming in from the management on back of where the cash flow is headed, on the fact that they are going to invest in AI. That's actually keeping the stock pretty much buzz and trade today. 2% uptick coming in for Paytm.
And talk about the first stock on the technicals, and that is HDFC Life, Kunal. This one is buzzing in trade today as well. But what is the up move that now you're expecting from HDFC Life? Last 6 months, around a 32% return. What is the upside that one should expect here?
From March or Feb 2022, that's almost 1.5 odd years back, the stock had a major resistance around the 600-625 mark. So there was this major trend line resistance which was playing a bit of a spoil sport for every kind of rally or bounce for HDFC Life, and the stock had been unable to fail or cross above those levels. But then in the last few weeks, the stock has not just broken past above this major resistance of 625, but in the last 2 or 3 days, the stock had bounced, retested towards the 625 mark. Today, what you're seeing is a bounce for HDFC Life, which again proves that the 625 mark is a huge support for the stock over the medium to long term, which has been tested over the last 1.5 odd years. So, would be bullish on HDFC Life and expecting that this 620-25 mark should act as a strong support. Keeping that as a stop loss, I would expect the stock to come back towards 680 to 700 in the next few weeks.
All right, that is Kunal's take coming in on HDFC Live. Makshi, power stocks have been in focus off late, but IEX, this one is in focus on back of a different news flow altogether, isn't it?
Yes, Cheryl. Let's first look at what the order has come in from CERC. Now, CERC has initiated discussion on market coupling with a staff paper. They have highlighted that, in fact, this has come in after Ministry of Power has directed the regulator to start discussions on market coupling in June 2023. Now, there are some matters that will be discussed, such as, the current Indian power market scenario. Does it actually form a compelling case for the market coupling? The effect of the coupling on technological innovation as well as competition. Who shall be the market coupling operator? Which algorithm should be adopted for a coupled market, as well as in which market segment should the coupling be introduced for? So a lot of matters that are expected to be discussed. Now, as far as what is next, the comments are expected to be submitted by September. This will be followed by a hearing, of course, and new draft regulations might come into place if required for the market coupling. And if that is approved, then the final regulations will finally kick in. So on the back of this news flow from CERC, we do have IEX in focus today. As of now, the stock is trading flat, up nearly 0.2% as we speak.
Keeping an eye on that, but power stocks that Cheryl was mentioning before as well, they have been in focus for some time. We're seeing a run-up coming in them as well. But Pankaj Tibrewal, Senior Vice President and Fund Manager at Kotak Equity Mutual Fund, also spoke to us in terms of the power sector, the power demand trends. What is he expecting over there? Let's go across and listen in.
So the entire power value chain should do well, whether it be transmission guys, whether it be the generation guys, whether it be the guys who are doing the EPC projects. And we incrementally are quite positive on this space, just considering the demand and supply. India cannot afford to have no thermal power generation. Incrementally, I think we will need to also plan the thermal power generation as you move ahead.
All right, that's Pankaj Tibrewal giving his take coming in on the power sector. But Kunal, let's talk about Bharat Electronics. How is this one looking on the charts to you?
So again, the stock has come back about that 130 mark. It had been a bit of a touch and go movement for BEL. The stock has been taking a lot of resistance at this zone, but today's price up move is something very interesting. The stock is coming closer to its previous major swing highs. The recovery from the last 2 days or 3 days low of 126 approximately for BEL has also been quite interesting. It's a typically very low beta stock, so it tends to move into a very narrow band for a prolonged period of time. But then when the stock gets into a breakout mode, the breakout tends to last for a small duration of time, but then the extent of the breakout is quite significant for a stock like BEL. So above 133 mark, I would believe that the stock should be up for at least a 10% up move over the very near term. So above 133, would look out for targets somewhere in the range of 145 to 148 for BEL.
145 to 148 is the target that Kunal is watching out for BEL. Let's move on to the next one. And Ankita, Jio Financials, second day that we're keeping an eye out on this one since it's listing. What's happening here?
That's correct, Winnie. It listed on the bourses yesterday and it made a rather tepid debut on the stock exchanges. It listed at 262 on National Stock Exchange versus the issue price of 261 rupees. Now, today it has been locked in the lower circuit since morning. It is down 5%, locked in the lower circuit. Now, there's a note on Jio Financials that had come out in the morning by Macquarie. Now, according to Macquarie, if Jio Financials can leverage 4x in the medium term, it could create an AUM of 80,000 crores in the next 4 to 5 years. Now, the AUM of 80,000 crores is roughly 30% of the AMU of Bajaj Finance. Now, Jio Financials currently has only 29 employees. They feel that they require an army of collection agents to start building the collection process, and the CTO and the CRO also have not been hired till now, and they also feel that it is unlikely that it will get into the secured segments initially. And on the back of that, Macquarie has come out with a note, and it is weighing down the stock as well, and the stock has been locked in the lower circuit since morning.
Okay, let's move on to the next one, and that is Bharat Forge. This stock is in focus on the back of a brokerage note that's coming from Nomura, where they're maintaining a buy on Bharat Forge and given a target price of 1,157 rupees per share. What they're saying is the defense segment is actually witnessing a sharp ramp up in FY24 and FY25, and they also see a potential to be a leading defense exporter. Is on an exponential growth path in the defense export sector as well. And let's not forget the stock is currently trading at 14 times FY25 EV to EBITDA, which is attractive given that the 31% EPS CAGR growth over FY24 to FY26 is what they're expecting. So yes, Nomura maintaining a buy and a target price of 1,157 rupees per share. That is why the stock is buzzing in trade, up almost 1.7%.
All right, that is Nomura reposing faith in Bharat Forge. In a short while from now, we'll also hear out what Bharat Forge management had to tell ET now. But before that, Kunal, let me take your take on Bharat Forge on the charts. How is it looking to you? Do you think that this sort of an attractive bet or the rise to a record high level will continue for Bharat Forge going ahead?
There was a steady rise like what we've seen for Bharat Forge over the last 10, 12 or maybe slightly higher number of weeks for the stock price. We expect that there should be a consistency of up move going forward. Now, interestingly, when we see such kind of a breakout of long-term highs or all-time highs for stock prices, we expect that stocks move into a nominal 15% up move over a span of the next 1 to 3 months at least. So, looking at that, I would believe that Bharat Forge should be ripe enough for another at least 100 to 150 point up move from current levels. So, minor dips should be taken as a good buying opportunity. And I would believe that for the next 1 to 3 months, the stock should be positioned for 1100 as a short to medium term target for the stock.
So in a very special series at CEO at Work meets ET now on the go. We caught up with Bharat Forge's Deputy MD Amit Kalyani as well at the plant in Pune. Let's go across and just have a sneak peek of what they were talking
about. One number which markets and shareholders always look at is ROS.
Yeah.
Your ROS has fluctuated in last couple of years. Is that largely because of investments?
It is because of investments. And please understand, it took 12 years for us to incubate our defense business. It will take less than that for our EV business. It has taken less than that for industrial. Our overseas businesses have taken longer because nobody could anticipate COVID and what it has done. But, our ROC targets are well in excess of 20%. And I'm confident that by 2025, we will be well in excess of 20%, 22, 23% or so.
So, does that also means that you're assuming your global business will come back? It has to
It will come back. Of course, it will come back. Our European business will be profitable this year. And our US business will, head towards profitability by the end of this year. And by next year, that also should be profitable.
So what Bharat Forge has achieved in last 5 years, you are likely to achieve that in next 2 years?
I hope so.
Because for you, all your businesses now are filing full cylinders. You're ready. Capex is done. And now it's really operating.
Capex is done, but we also need to do more Capex as we announced in
the last quarterly numbers, yes.
We'll invest slightly over 1,000 crores in the next, 24 months or so, in both our conventional business, in EV, in aerospace, and in industrial.
What are you doing to increase the moat around your business? Good companies always focus on that. How can they make the company more distinctive?
So, we are increasing our moat by doing 3 things. One is, in our existing business, we will become the last man standing, which means the highest quality, the highest capability of engineering, most competitive cost-wise, and unmatched financial strength. In new areas, we will be lean, mean and hungry, and we will use technology to drive our business, and we will continuously reduce cost, and we will use technology to reduce cost. And we have an amazing technology platform that we have in place now, which is going to help us increase our productivity quite dramatically while reducing cost. So that is what we will do to reduce to increase our moat. And the last thing you have to do to increase your moat is increase your customer affinity or your customer relationship. And that has to be through engagement, bringing value to your customer. And that is something we do through technology. And that's what we do in this building and the next building.
All right, and that's the ET Now special, ET Now on the go, Pune edition. You will be able to catch the snippets of that through the course of the week. But let's move on. Let's talk about Adani Enterprises and Adani Group counters as a whole. All of them are buzzing in trade. If you look at Adani Enterprises, it hit its highest level since May 24th in today's trading session. The stock is on track for fourth consecutive day of gains. It's already up approximately 8% in last three trading sessions. And Adani Enterprises actually informed the exchanges that its top shareholder, Campus Trade and Investment, has hiked the stake to 69.87% from 69.65%. This via open market transactions between August 7th and August 18th. And on back of that, all the Adani Group counters have actually are seeing good uptick. And not to forget, you also had GQG Partners as raised stake in Adani Ports also of late. So that also is aiding the up move in these Adani Group counters. Today also, as you can see on your screen, Adani Enterprises holding on to strong gains, about 2.2% in an otherwise flat market.
Absolutely. Let's move on and talk about the next stock that is in focus, and that is Indo Amines. And Mamakshi, what is the news flow around this? Why is this buzzing in trade today, up 8% as of now?
Well, yes, Vinny, as you rightly pointed out, this counter is soaring in the trading session today, and that is because of an announcement that has come in from the company. Now, earlier, back on August 11th, there was an announcement that the company had made, which was regarding the closure of the plant unit of the company, which was situated at Vadodara, and that was for a temporary period. And an update has come in on that front, wherein the company has received the revocation of closure order from the Gujarat Pollution Control Board. So that is a positive news flow for this counter. In fact, the board has also granted consolidation consent and authorization with its order that was dated 21st August. So on and on, this does augur well for Indo Amines. That is the reason why this counter is soaring in trade today. As of now, the stock is up nearly 8%.
All right, that is Indo Amines, that is in focus. But now let's talk about a commodity-oriented counter, and that is Hindustan Copper. Yes, no doubt, a lot of these stocks actually depend on the movement when it comes to the global markets, the global commodity prices. As we can see it on the screen in the charts, also in the last 6 months or the last 1 month, this particular stock is taking a sort of a breather. Where do you see Hindustan Copper headed from here on? After this 37% rise is seen in 6 months, you think it will take a pause?
Like from 160 odd, the stock is sub 140. I think the recent low for the stock was around 135 from where it's bounced back. So which means that the stock has gone through an ample amount of correction in the last few days. Now on the weekly as well as on the monthly chart specifically, the stock is forming a bullish flag kind of a pattern on the long-term charts, and that is something which is the more attractive pattern for a stock like Hindustan Copper. This ideally indicates that the stock should be a good buy and dips candidate, even though the beta for Hindustan Copper is significantly high as compared to maybe most of the other peers from the similar space, commodities, etc. But I believe that the prospects for the stock look fairly attractive. So buy on dips for Hindustan Copper and expecting a significant upside over the next 6 months to 1 year at least.
Okay, let's move on and to the next stock, and that is going to be Aurobindo Pharma. Ankita, why is Aurobindo Pharma in focus today? We're seeing that it's falling in trade today. What is the news flow?
That's correct, Winnie. It is down almost 2% in trade. Now it is on the back of a note that came out by Citi. Now Citi has downgraded the stock to sell from buy and hiked the target price to 750 rupees from 660 rupees per share. Now they feel that the improved market conditions in the US generics may not be able to sustain, and they see limited visibility on the generics pipeline. They also see that the upside from the biosimilars is sometime away from now, and in the near term the upside levers have been priced in, and on the back of that they have downgraded the stock to sell from buy, and on the back of that we are seeing a downtick of 2.5% on Aurobindo Pharma.
Okay, let's move on and talk about stock number 12 for today. We're going to keep an eye out on NHPC because they have interpacked with Rights Limited, and this is to construct railway sidings for around 2,880 megawatt Dibang multi-purpose project in Arunachal Pradesh. Now the company is highlighting that they've signed this MOU with Rights for this railway siding at Arunachal Pradesh in Pasighat. So keeping an eye out on NHPC, giving up those morning gains and also gains, but also keep an eye out on Rights as well with that.
All right, moving on, let's talk about AU Small Finance Bank, and that particular counter was trading higher by about 2.8%. Last time I actually checked this particular stock. It was also the top gainer on the Nifty Bank Index as of now. And also, if you look at management, in an analyst call, they said that the company is actually well placed to sustain the 25 to 30% growth rate over the next few years. And that's sort of a positive commentary sent the stock actually buzzing in trade. If you see AU Small Finance's asset quality ratio is likely to remain stable due to the focus on secure lending. That's the word coming in from Motilal Oswal. So yes, positive commentary coming in from the management. You have a brokerage also backing that particular counter, and you can see on your screen 2.3% uptick coming in for AU Small Finance Bank.
Absolutely, a sharp up move coming in over there. But let's move on, talk about GMDC on the charts then. And Kunal, how is GMDC now looking on the charts? What is the target that you are keeping an eye out on this one? We have seen a sharp run up coming in from around those 124 levels, today trading at 192 levels. Still a further upside expected?
So the stock has formed a swing breakout, in fact a 52-week high breakout, breaking past about I think 185 or 84. That was the previous high for GMDC, and the stock had taken a lot of pause or resistance at this level. So today seems to be more of a cleaner breakout. The volumes are also inching up pretty much high for GMDC. In fact, the weekly volumes for the stock, so on the weekly charts, is almost at a 3-week high for the stock price on the NSE. So that itself indicates that there's been a lot of fervor in buying the stock today. And with this classical breakout about that 184 mark, I think the near-term prospects look fairly attractive for GMDC. So mid-cap name, non-FNO stock, would look out for targets somewhere in the range of 208 to 220 for GMDC over the very near term.
All right, so that is GMDC for you. But Makshi, IIFL Finance, why is this one in the spotlight today?
Well, yes, Cheryl, this stock is buzzing in the trading session today, and that is on the back of a brokerage note that has come in from ICICI Securities. They've initiated coverage on this counter and given a target price of almost 760 odd rupees, which is significantly higher than the current market price of around 600 rupees per share. Now they have given a note and wherein they believe that IIFL Finance is a direct play on increasing financial formalization with its presence in high growth segments. Other than that, the company does boast of a diversified product portfolio. They have nearly 4,000 plus physical branches. They are focusing on scaling up high margin products such as gold loans, MFI, as well as digital loans. In fact, they're also expecting that all their end-to-end processes will now be digital. They have a very strong control on their asset quality. Other than that, the company also aims to deliver nearly 20 to 25% AUM growth in the near term with an ROE of almost 3.5% and an ROE of over 20%. Definitely, so all these factors, we have IIFL Finance in focus. ICICI Securities has initiated coverage, buy rating, a big thumbs up coming in from them, and that is the reason why the stock is trading in the green as of now.
Let's move on to stock number 16, and Kunal, BHEL, what is the chart indicating for this one? Furthermore, up move expected?
It's one of my favorite stocks where I've been recommending this stock quite consistently over the last many months, and even on the short-term charts, the stock is looking extremely attractive. So we've been recommending a buy on BHEL. Of late, our recommendation was closer to 95-96 levels. The stock is almost at 103, 104 mark the last I'd seen, and it's formed a double bottom on the daily charts for BHEL, and that pattern height is almost 7 to 8 rupees for BHEL, and the breakout point is around 103 mark, which means that from a short term you are looking at least 110 to 112 as a potential target for BHEL. So traders could look at a buy at current levels, whether it's in futures or whether it's in the normal cash segment, for a potential target of 112 approximately for BHEL.
All right, so that's the take coming in on Kunal's all-time favorite stock, at least for now, that is BHEL. But on that note, we'll slip into a break on this edition of Market Fatafat. Stay tuned, lots more stock to discuss on the other side. Don't go anywhere.